my goal for my presentation, which should take about 25-30 minutes, is to create an investment context for the conference that you're at and the presentations and the panels that you're going to see throughout the day. I'm also going to try and create a context for where the core technologies that you're going to see, AR, VR, IoT, and AI, and where they're going. And also highlight the opportunity to invest in this particular asset class, which is private companies / venture capital. During the rest of the morning, you'll see at the very back, there's lots of demos. There's executives here from companies we've invested in. There's 10 companies here. We've got the CEOs, CTOs, COOs of those companies. So I hope you get an opportunity to take the demos, and there's some great demos back there. Talk to the executives about their businesses, and hopefully you'll ask them about investment opportunities in their business now and in the future. So the first thing to get across is, the news is mixed out there in general, and I think let's just get that out there at the very start. I mean, if you look at some of these more recent pieces of press, bad news about the stock market, bad news about equities, bad news about bonds, bad news about certain companies like Apple and Apple sales, and also bad news about things like Brexit as well. I guess I'm here to say that that all sounds pretty bad, but as everybody in the room knows, there's plenty of investment opportunities out there, and plenty of good investment opportunities out there. And our focus on today is how allocating assets to investing in startups or the venture capital class is a key strategy for diversification of portfolios. And I'd like you to bear that in mind as we're going through the panels and presentations today. So just as a bit of motivation for that, I just wanted to show two quick graphs on PE and venture capital versus the public markets. The first is from the Wall Street Journal in 2018, and the question is, does private equity really beat the stock market? And they created two indexes to examine that. And hopefully, if you can see that, what you should be able to see is that private equity has substantially outperformed the S&P 500 from their range here is 2002 to 2017. And then the second graph is a really interesting analysis done of approximately 1,000 venture capital investments or investments in private software companies. And they modeled it on a cash-in and cash-out basis to create a really, truly accurate representation of what was happening. And as you can see, the cash-on-cash return for the S&P over the period that they were examining was about 1.2x cash-on-cash return. But the return on venture, on the 1,000 venture deals taken as a pool, was about a 2.8x cash-on-cash return. So the kind of moral of that is that investing in private software companies and venture as part of a portfolio can help juice the return of that portfolio. And just another example of that is an analysis that was done by Cambridge Associates of the history of returns across a range of asset classes. And if you look across the top line, what you'll see is that venture over a 5, 10, 15, 20, or 25-year period does produce outsized returns versus other asset classes. And it might be interesting to compare, let's say, a large cap equity. So over a 5-year, you've got a 48% return versus a 12% return. And over a 25-year, you've got a 57% return versus a 10% return. So I think that highlights the opportunity to invest in the types of companies that we have here today. Now, I guess for portfolio managers, one of the really interesting things about this asset class is that it's generally lightly correlated, or not correlated at all in some cases, to different asset classes. And so again, if you see across the top, you'll see the correlation between venture capital and private equity is about 0.71, which is not really that surprising, as it's a subset of private equity. It's about 0.69 to real estate, but it's virtually zero for large cap equity. It's negative 0.6, minus 0.13 to high yield bonds, and then 0.13 to an aggregate core bond. And again, what that actually means is that this as an asset class can help diversifications of your portfolio. Now, I couldn't really talk about tech without talking about the FANGs, Facebook, Amazon, Netflix, and Google. And what you see with these FANGs, I've got a 5-year here on the left-hand side, and I've got a 1-year on the right-hand side. And you can see the 5-year exhibits a classic S-curve. So starts off small, grows very rapidly, and then tails off towards the top. And if you look at the 1-year on the FANGs, it's really trading in the same range. And that's quite typical of an S-curve of innovation in the economy, where you start quite small, grow rapidly, and then tail off. And I think that's important for what we're going to talk about. Then the next thing I'd like to highlight, and I'm sure everybody in the room will be very familiar with this, this is an analysis of iPhone sales. And you see that S-curve exhibited again, where, in 2007, the iPhone was just getting going. It's had a tremendous growth. It's really grown very, very strongly. But it tailed off in 2015, and sales have started to slow. And so it's exhibiting that S-curve where growth is hard to come by. We see that in the economy at large. And I guess that's really what I'm here to talk about today, and that's really where these companies that you're going to meet are coming from. Over the last 30 to 40 years, we've seen 3 major S-curves in the economy: the PC S-curve, the internet S-curve, and the mobile S-curve. And what you see in each of these S-curves is hardware companies, billion-dollar hardware companies being created over time, leading on to billion-dollar software companies. You see that in the PC era with, for example, Dell or Compaq, and Microsoft being a key software winner. You see it in the internet with Cisco being the big hardware winner, with the routers and switches that power the internet, and it enabling a myriad of innovation. Companies like Google and Facebook emerged at this time, but many, many others as well. And that internet S-curve then led into the S-curve of mobile, with the iPhone and with Android, and with the sales that we've seen of those phones and the software platforms that were created around them, we've seen incredible innovation over the last 10 years. And certain companies made very good transitions to mobile, Facebook being an obvious example, notwithstanding its recent challenges. But also brand new billion-dollar software companies emerged: WhatsApp, Snapchat, WeChat, and of course Uber and Spotify. But we're right at the top of that S-curve right now. So the question is, what comes next? If you're investing in tech, where are the areas to invest in right now? And we see 2 major S-curves emerging out of the mobile ecosystem. The first S-curve is augmented reality and virtual reality technology, AR and VR. The second one is the Internet of Things. And part of the reason these S-curves emerged is because the volumes of iPhone sales and Android sales has brought the cost down of sensors. And this has enabled these new devices and new systems to be created. And then, of course, there's a third major S-curve occurring at the moment that's playing into the general trend of cloud computing, mobile devices, and that's artificial intelligence. And we're at the start of each of those S-curves, but there's huge growth and huge opportunity to be gained in each of those. This particular slide shows the S-curve starting to be built out for AR and VR and MR. And you can already start to see some of those hardware manufacturers creating the hardware products of tomorrow. Our view in our fund, in Shore Valley Ventures, is that these hardware platforms will enable the billion-dollar software companies of tomorrow. And hopefully, with a bit of luck, you're seeing some of those in the room today. On the right-hand side of that diagram, you're seeing growth rates for each of those areas as well. And what characterizes the early stages of this S-curve is massive opportunity for new software companies to emerge and massive growth rates for those companies. So looking at AR and VR, there's been a whole range of analyst estimates as to how that market will grow. Everything from very, very rapidly to just rapidly. But all of them have the same thing, which is that the CAGR growth typically is 80 to 100% in that market. And each of the companies that we're investing in, and you'll see some amazing VR demos and AR demos as you go throughout the day, you'll see why. If you get into a VR demo, you'll see the power of that technology, the empathy it can create. And so we're super positive about where this market is going and the opportunity for it. IoT is already quite established, but the challenge in investing in IoT is understanding, IoT is quite a broad term, so it's understanding what part of IoT are you investing in. And you'll see some great companies here today that are providing key solutions in IoT, everything from developer platforms to medical device, cybersecurity software, to telematics software. And I'd encourage you to go see the demos. And IoT is growing at a very rapid clip as well. And then finally, AI is becoming all-pervasive across society. And I just picked one graph here just to show the potential of AI and FinTech becoming a $7 billion industry by 2022 with growth rates of 40%. And the way to think about this, and our view of the world is, if we can invest in these companies at early stages and work with the companies and work with investors such as yourselves to grow those companies will become the household names of tomorrow. And maybe I draw you to the top left-hand side of this. This is some background on the VR market. There's a price point here that I think is a mass market adoption price point, which is £130 for VR headsets. And we're actually quite close to that right now with the Oculus Go. That's a VR headset you can take out of your bag. It's got no wires. You can put it on. You can get a great VR experience, and it's about $199. And that's coming down in price the whole time. But actually, my favorite stat is that more than 1 in 10 people state that VR is actually better than real life. Now, I'm not actually sure of that myself, but you can try some of the VR demos yourself, and maybe we'll do a straw poll at the end to see, is VR better than real life? But what it does show, what that stat does highlight, is the power of a VR experience, and AR is very related to that. VR really is a media for empathy, and you'll see incredible work being done in it. So some of the other very quick stats, headset sales are expected to grow very rapidly. There's lots and lots of use cases for VR, both consumer and enterprise use cases, and software is going to be a key part of that. What we've really seen to date in VR and AR are the hardware manufacturers coming out with new products. Sometimes we're now at second and third generation of those products. What we're going to see is more and more software that will change our personal lives, but will also change how things are done in the enterprise. Now, AR is very similar as well. There's two types of AR that we invest in. There's kind of AR on your mobile phone, and then there's AR in your glasses, smart glasses. And both of those can overlay digital information on the real world, and that's very, very powerful. There's also, I would say, there's also a third one as well, which is kind of like heads-up displays in cars, and that's a very interesting use case as well. Now, one thing to know about mobile AR is that very shortly, by 2020, we're going to have about 3.5 billion phones capable of doing mobile AR. And we have one of our companies is a leader in the gaming space for mobile AR and building the next version of Pokemon Go. So hopefully you go get a demo there as well. And smart glass AR are currently selling in the tens of thousands, and the use cases are primarily enterprise right now. But by 2022, it's expected we'll go to millions of smart glasses, and they'll be used both in enterprise, industrial, and also consumer use cases. So one of the ways of thinking about this is when you got your first mobile phone, it didn't do very much. Even when you got your first iPhone or Android phone 10 years ago, it didn't even have an app store. And now look at what we do with our devices. I mean, they are effectively replacements for PCs. And one of our companies, Immersive VR Education, launched the Apollo 11 virtual reality experience. And one of the things that's really interesting, that's about the journey to the moon. One thing that's really interesting about these phones is that there's more power in my phone than there was all of the compute power that landed Neil Armstrong and Buzz Aldrin on the moon. So one of the things I think you need to envisage in the S-curve of AR and VR is what's this going to be like next year? What's this going to be like the year after? And what are the applications that are coming? And you can see these things here today. So again, I encourage you to take the demos. Now, we're going to have a great IoT panel here today that Isabel is going to be leading. And IoT is a really interesting area. It's using sensors and software systems to solve real problems in medtech, in smart cities, in enterprise, in Industrial 4.0, and in the home. And we have examples of most of these types of use cases here today. One really interesting thing about the UK is it's underinvested in the UK. If you look at Canada, for example, and actually I've got it on the bottom left-hand slide of the presentation here. So total UK investment is less than Canada. And Canada is a country half the size of the UK. So there's a real opportunity. IoT is now, it's been delivered in cities, it's been delivered in business, it's been delivered in telematics. It's solving real problems. And again, I encourage you, I can see the Provision stand at the very end, which is an IoT telematics company. I'd encourage you to check that out as well. And then looking at AI, so we have Eric Rizzer here, who's going to do a keynote on AI in creative industries. So I thought I would take just a look at a different industry, which is AI and FinTech. And I'll give you 1 second to look at all of the areas that AI is expected to impact on in FinTech. In fact, the AI in FinTech market is expected to grow from just under $1 billion in 2016 to 7.6 billion or 7.3 billion in 2022. And its CAGR is a 40% CAGR. And just look at all the areas we expect FinTech or AI to have an impact in FinTech. So credit scoring, direct lending, personal assistance for finance, asset management, insurance, market research, debt collection, business finance and reporting, predictive analytics, and also regulatory and compliance as well. So what we're going to see over the next couple of years is AI become pervasive in the financial services community. Many of you are using AI already, but that's just going to keep going and going and going. And that's replicated in a whole range of other industries as well. And we're going to see Eric talk about how Artomatix as a company can cut the cost of production in content creation, AR and VR, animated movies, video games, special effects by up to 80% using AI automation. So really, truly powerful S-curve trend that we're going through right now. Right, so just as a bit of background, I never introduced me or us or what we're doing. So who are Shore Valley Ventures and who's Shore Ventures? Well, we're an entrepreneur-led venture capital fund. We invest in high-growth frontiers of tech software companies, and these companies, for us, need to solve real problems in the real world as well, and you'll see that here today. And this particular fund, we're building a portfolio of 30 high-growth companies in the 3 areas that I mentioned: AR and VR, IoT, and artificial intelligence. And we're primarily focused on the UK and Ireland. And part of the reason for that is, if you look at those areas that we're investing in, the UK and Ireland has a very particular competency in these areas, born out of the internet and telecoms industries. And so, for example, if you look at the top 3 centres for artificial intelligence companies in Europe, London is number 1, Dublin is number 2 for artificial intelligence companies. So we're investing in the areas where these new companies are emerging and where they can follow those S-curves of growth. And I just want to highlight a couple of the team members here today. So my own background, some of you know me as an entrepreneur, and you obviously love working with all the entrepreneurs in the room as well. I founded the fund with Brian Canan, who's also here. We've got Isabel, who's going to be running a panel very shortly, and we've got Cian, who's recently joined us to establish the Cambridge office. And we've got Gareth, who's based here in London, and also Graham joined the team as well. And so hopefully you get an opportunity to talk to each of the team members here today, and they can tell you a little bit more about the work that we do and also some of the companies that are here also. And to establish the fund, we partnered with Shard Capital. And I want to highlight the Shard Capital representatives here today. So we've got James Lewis, who's the founder and managing partner of Shard. We've got Toby Raincock, the CEO. We've got Damon, who's here, who's the head of corporate broking. Eric, who's with the corporate broking team as well. Simon, who's with the corporate finance team. We've got Julian, who is the compere for the morning. Thank you, Julian. Simon, the head of marketing, who set up the event and has organized it for us. Thank you, Simon. And Kimberly and Bryony, who you would have met. Kimberly works in the marketing team, and Bryony, who you met as you arrived. But most of the companies here are not raising a round right now, but they will be raising capital later on this year or early next year. So this is an opportunity to meet these companies in the early stage and understand what the investment opportunity is.